Ladies and gentlemen, good afternoon from London, and you're all very welcome to join this afternoon's live online event at Colliers, which will address the fabulous topic of world-class execution in complex and emerging markets. So as a bit of an introduction to today's session, execution of corporate real estate strategy in complex and emerging markets presents a unique set of challenges, from navigating market transparency and managing operational risks to working in remote locations with health, safety, and security concerns. Today's panel will explore these challenges, drawing from the experiences of a number of senior industry leaders who have successfully developed and executed integrated real estate strategies in some of the world's most complicated geographies. The discussion will highlight the wider political and economic context impacting the real estate industry throughout the world. Addressing issues from corruption to bureaucracy, the impact of regional conflicts, the experts will explore these factors and how they impact the criticality of execution to mitigate the spectrum of business risks. Finally, the panel will address the importance of diversity and inclusion in the real estate industry across complex emerging markets. As the industry continues to grow and mature, it is essential that all voices are heard, and the real estate industry builds a dynamic, positive, inclusive environment. Colliers are delighted today to partner with Connect Global, our industry's professional association, to bring you this event. A little bit more at the end of the session about the upcoming summit in Dubai in September. But before we kick off, let me first of all introduce our panel. So we are delighted to be joined by four leading industry experts in the area of complex and emerging markets. Shelley Boland, the Global Head of Property for Standard Chartered Bank. Rainier Seaman, the Head of Global Real Estate Services for the World Bank. Sandra Oliver, Section Chief at the International Monetary Fund. And Philip Rurko, Head of Complex and Emerging Market Solutions for Colliers. So without further ado, let me hand over to the panel, and we'll ask each of them just to introduce themselves and tell you a little bit about themselves. Sandra, would you like to go first?
Certainly. Thank you, Andrew. And good afternoon, everyone. It's morning here in DC, but I've already had my coffee, so I think I'm ready to go. My name is Sandy Oliver. I'm the Global Real Estate Section Chief here at the International Monetary Fund. We're based in Washington, DC. Our portfolio consists of about 220 properties in just over 100 countries, encompassing about 3.9 million square feet. 900,000 of that is overseas. We do have 4 owned properties here in DC, and then the rest of the portfolio, majority overseas, is roughly 175 leased sites plus another 40 plus government hosted buildings. That's a mix of office and residential, executive residences for our head of office in country.
Great, thank you, Sandy. Shelley, would you like to go next?
Great, thank you. Well, good morning, good afternoon, and for me, I'm joining from Singapore, so it's good evening from Asia. Shelley Boland, I am the Global Head of Property for Standard Chartered Bank. Delighted to join today, and a little bit of context around our portfolio. Similar to Sandra, quite complex. It's across 59 markets, around 1,400 properties globally. And that includes around 600 plus retail outlets where we offer banking services in Africa, Middle East, and Asia. We're serviced through a team of around 9,500 colleagues, if I think of all of our suppliers and partners to manage that portfolio. And approximately 40% of it is owned. The rest would be through leasehold. It's very much a hybrid delivery model. So we have a retained strategic in-house team, and then we partner with best-in-class supply chain in those diverse markets. and the property function is responsible for all of the CRE activities, from asset management and workplace right through to security, safety, health and well-being. So great to join you all today. Thanks.
Great. Thank you, Shelley. Rainier?
Thank you very much, Andrew. My name is Rainier. I'm with the World Bank. I'm based in Washington, D.C. Some of you might know me for my 13 years I've spent in the Middle East. The World Bank is 170 odd offices in 141 locations and around about 13,000 staff and a few thousand contractors on top of that. We're in 39 fragile, conflict and violent countries. Some of those locations are very far away from us, Solomon Islands, Vanuatu, Kiribati, PNG, Mali, Central African Republic, Guinea, the Gambia and El Salvador. So these locations are incredibly complex to set up a location to actually manage the World Bank's business from those locations. We have a smallish team. We all self-delivering in terms of projects and real estate transaction services, although we are looking at augmenting that function with shared services delivery partners. And in terms of projects, we have about 120 projects a year. And we've currently just finished 2 ground-up owned construction projects in Burkina Faso and Niger. And we have 4 more ongoing and many more planned. So quite busy and happy to spend some time with you.
Fantastic. Thank you, Rainier. And Philip.
Good morning, good afternoon, everyone. So my name is Filip Rerko. I'm the head of Complex and Emerging Markets. I'm based in Prague, Czech Republic. For us, complex and emerging markets is an area including all of Africa, Middle East, and stands. The complex and emerging markets platform is something we've basically started building from scratch almost 3 years ago, and I'm really excited to kind of where we've gotten with the maturity of the team and the service line proposition. So really excited to be on this call. Good, welcome everybody.
Excellent. Thank you, Philip. Well, look, as we kind of paint a bit of context around this really interesting and exciting topic, we thought it might be helpful to start with a definition. So, the question, and maybe Shelley will start with you. Obviously, your portfolio is very diverse in some very mature developed markets and in some less developed and mature markets. So, Shelley, what's your definition of what a complex and emerging market is?
Yeah, thanks, Andrew. And look, I think it'd be slightly different for each of the panelists. But for us, if I think of those 59 markets we operate, the greatest proportion in Asia, Africa, Middle East, Pakistan, and then Europe and Americas. So you can see that in some of those locations, very advanced, developing, and while complex, wouldn't have some of the challenges of other locations. For us, we really look at the complex emerging markets through a few lenses where it has characteristics that are obviously quite different to the developed markets. And that's when you look at through a lens of the risk profile, the capital arrangements, the economic outlook. Clearly, there is a safety and security aspect. And that's not only for our colleagues that work at the organization, but we think of that in extending that right through to our clients and then the broader communities that we operate. So we're very much looking at characteristics that are different when you think of those external factors, both economic, risk, the people, and well as the actual operations on the ground.
Got it. Thanks, Shelley. And Rainier, would that definition be similar to how the World Bank think of this, or is your definition a little bit different?
It's very similar, Andrew. I think the complex emerging markets is, for us represent those locations that, represent significant challenges and complexities beyond the typical challenges that you encounter in a mature market. So these challenges can arise from factors like, political instability, institutional weaknesses, inadequate infrastructure, regulatory, uncertainties, and social and cultural differences. All of this in one basket just means that for a real estate professional, it's incredibly complex. If you pick up the phone and you need to set up a new locations in these countries.
And Sandra, maybe then building on some of Rainier's observations, he talked about risks and challenges. So when the International Monetary Fund goes to look for a new location, put a new office in place, or change an existing location, what are those primary risks and challenges that are front of mind as you make those decisions?
Well, I think from a risk perspective, it's obviously safety and security of our staff who will be operating from that country. There's other elements. We've got reputational that we have to be concerned of, who we partner with in country. Operational, just from the means of having reliable power or even connectivity. That kind of leads us into some of the challenges. Rainier said, you can't just pick up the phone and say, okay, we're opening up a new office, we're relocating in Burkina Faso. Where can I go? There isn't necessarily even a market available for us to, when you overlay the security requirements that we have. So the lack of suppliers in country, the lack of a sort of a transparent market is certainly a challenge. There's a legal framework that we have to digest in every country. And then you have a little bit more practical, the currency exchange, fluctuations, the OFAC, the sanctions, how we remit payments in country, down to the cultural and more norms of the market that you're in. The schedules can be impacted just by the way that they, work local time, as you would call it, the sort of the culture and the way that work is approached. Then you've also, as was mentioned, any sort of regional conflicts or any issues impacting the region can have a big impact when we're trying to operate.
And Philip, kind of rounding that out, you've spent quite a lot of time on the ground in Africa, particularly over the last 12 to 18 months. What are the typical risks and issues that you've seen trying to execute at the coalface?
Yeah, I guess a lot of it has been said already, Andrew. I guess from the execution standpoint, at the end of the day, it's all about the people. It's all about the people that you work with on the ground, kind of how you structure the project governance, both in terms of project execution and also kind of building the relationship and building the framework with the local supplier. So I guess we'll talk about it in a minute when we get potentially to the DNY, but I guess what I'm particularly trying to establish is kind of how do we, working with the local network and working with the local people, how do we change the mindset from, being a broker to someone who's more sort of an advisor? How do we change the silo mentality when someone is just looking to get quick money, even for the basic things like a market report? Kind of how do we, working with the partners, in the long term, how do we shift that mindset that what we're trying to build is a long-term partnership and long-term trust. It takes time, it takes a lot of effort, it takes a lot of the cultural awareness. So I definitely second everything that Sandra and Rainier has said about the local execution.
So maybe pivoting a little bit back to core occupational requirements. So CoreNet has done a phenomenal job certainly well over the last decade in helping educate the industry around the criticality of workplace experience being at the core of real estate functionality. And today that's just common perspective in terms of how people think about how they use space. So Rainier, back to a comment that you made about the core occupational requirements are very different in these markets. You have serious risk issues, serious health and safety issues. So how do you balance those different issues in complex and emerging markets, particularly around health, safety, and security, with what should be our core role as corporate real estate leaders to deliver great workplace experience for the people who occupy the buildings?
So, security is probably one of our key focus areas. And, to put that in perspective, Andrew, in the last 18 months, we've had 8 country evacuations, right? Where we didn't have a choice but to actually secure the health and safety of our employees. And some of these are very intricate operations, right? To get people out of a country in a time when there's war ongoing, right? So I'll just give an example of Sudan, where we have to move people across the country into a port and then on a ship out. So it's health and safety, security is key for us. How do we balance it? It's country by country, to be honest. And looking at workplace as a enabler, it's very difficult to have a one-size-fits-all model. You can try to attempt that, but it doesn't ever work. And I'll give you an example is that 2 weeks ago, I was in Abidjan, and the experience there was different to a location we went to just after that, which is in Cameroon. Cameroon, they say we need the office, we need the connectivity, we need the power, we cannot work from home. In Abidjan, people's like, well, we got quite used to this agile type of working, so we'd like to continue because we have fairly stable power and we have a good internet service, right? So you can see the two dynamics that's coming to play. The one saying, bring us back to the office, don't take it away, we need more space. And the other one says, don't bother, we actually got quite used to working like this.
Kelly, I know one of the operating philosophies coming out of Standard Chartered Bank at the moment is double the experience, half the space. I think I've got that right. Does that still stand across your portfolio in complex and emerging markets as you focus on doubling the experience, yet still balancing some of those health, safety, and security concerns that Renia mentioned?
Yeah, if I think of our property priorities, it's twice the experience. So good job there, Andrew. And it's all around the performance of that portfolio. And then obviously we've made a very public show that we are going to transform our branch network into a more affluent and wealth centre, which when you look at it for a branch in Singapore, is probably a very different proposition to what is one of our largest retail networks if I look at markets such as Pakistan. So it absolutely, to Renee's well-made point, the experience and the expectation in these complex and emerging markets, it isn't one size fits all. And you do need to be able to understand what those colleagues need. For us, we're a client-facing business, we need to understand what the client base, how that works. And in some cases, we may need to invest in the broader community just so that we can enhance the whole environment in terms of the workforce. A couple of areas just to add around the operations, what we found hugely beneficial when going into these markets is partnerships. So this is where we marry up the centre's expertise in running that business or running that portfolio, but we leverage local partners who are integrated into that environment, whether it's a regulatory environment, clearly an economic environment, a supply chain, and together it's quite a powerful group, at least to get you up and running. And then over time, as your model matures or your operations become more sustainable, you may flex that. But if I was thinking about some ideas around that operations that I think Renee alluded to, you've got to have those local partners to give you a sense of what's happening on the front line, especially in examples where health, safety and security are a live activity that you need to manage in the moment in those very complex markets.
Sorry, Andrew, I just want to add on to what Shelley said, is that I think on the other side of the coin is that these emerging markets offer significant growth potential and untapped market opportunities in the real estate development and investment area. Now, for us, from a pure headcount growth strategy, this is a challenge, right? Because The moment I finish building a property, it's probably too small because of the dynamics around the growth. And it's very difficult to predict that growth, longer than a year or 2 years. So the dynamics that we're thinking about is how do we actually construct and build construction, offices that has the ability to morph over time and absorb more people. And the answer is not always necessarily double up on desks, right? This is where it gets complex. Thank you, Shelley.
And Sandra, in your world in the IMF, what is that balance between or potential trade-off delivering a great employee workplace experience versus ensuring the health and safety of those folks there?
Well, I think it goes hand in hand, honestly. We start with the basis of the health and safety as a foundational framework, right from the get-go with the site selection. And we work closely with our colleagues in our security services group to ensure that what we decide and ultimately fit out will actually provide a space that will achieve those goals. Now, we blend in with what's happened since the pandemic. I hear talk about the sharing of desks, the hybrid work, and we've already talked about the issues with reliable power and internet connectivity, correct? Our offices, for the majority, probably 85% of our offices are quite small. I mean, they're less than seven people. That doesn't bode well to desk sharing in such a small space. So we're not looking at enhancing the experience necessarily that way. We're adding in things that might be needed from a hybrid meeting space, or so that they can, if they do have colleagues that happen to be away on mission, or they're working back here with headquarters, how that they can have these virtual missions more effectively. That's where we're seeing sort of the experience increase. We also have a pretty traditional workforce out in most of our field offices. They don't necessarily need the bells and whistles that we have here at headquarters. They just really want to get the mandate of the fund accomplished and as effectively and efficiently as possible. So we try and do that through space.
Sandra, a great observation that, in fact, health and safety is the fundamental building block that enables a great experience. And in fact, core occupational requirements, they're not different. They're just applied in a slightly different context. So great observations there. So let's turn to some of the positives and some of the opportunities. So Philip, you work with a whole range of different organizations from different sectors that are super excited, particularly about Africa, and are growing like crazy throughout the region. So when you think about, Philip, the opportunity, commercial opportunity, however you want to define that, that's represented by complex and emerging markets, how do you think about that opportunity?
I think it goes hand in hand with the wider risks were set at the outset of the call. But if you look at the ultimate opportunity, it's a growing market. Ultimately, it's going to be the best region in the world by 2030. So the number of people are growing. The population is very young. The population is very motivated. The ability to speak English is, I wouldn't say is great, but it's increasing. And also the technology sector is leading the way. I mean, you see companies like Amazon opening logistics, around the continent. Google's building cables around the continent. So I mean, all of these things put together, the adaptability, the connectivity, internet access. So the opportunity is definitely there, both historically. When you look at some of the regions and how they connected, for example, to Europe, with Northern Africa being the leading way to connection to Europe. So from the occupier standpoint perspective, the opportunity short term, but definitely longer term, is definitely there.
And Shelley, that kind of correlates with the core strategic focus of Standard Chartered Bank that's made your business focused on complex and emerging markets and being one of the leading globally diversified banks focused on a lot of these geographies. So is Standard Chartered Bank still as positive with a long outlook on these geographies, or is there a little bit more hesitance in the model these days?
No, I think I'd pick up on your first point. I mean, perhaps when we started the discussion, you may have a sense that it was more about the challenges. I think our organisation absolutely looks at the opportunities, and that's both from a colleague perspective in terms of an employer of choice. We want to be the best in class in terms of a customer experience. We really want to pioneer in some of these markets. And as part of our Here for Good brand promise, we are looking at the broader. So if I look at some of the very publicly found results, you can see that in Africa, Middle East, in the past year, Standard Chartered has posted a record profit income from that region with broad-based growth across market segments and products. In particular, you're starting to see a sort of 28-30% impact against our bottom line from these emerging markets. And in particular, we're seeing locations such as Pakistan, Ghana, and we've got a very strong retail banking business in Kenya that are really starting to deliver on what, as Philip said, a really growing wallet for an emerging affluent, as well as the younger generation as they're building their opportunities in their wealth. So being such a unique, diverse footprint across the 59 markets, it also gives us a unique position where we can also offer the opportunity for domestic investment to come into this region, but also we can start to take the investment capacity that's in markets like Africa and Middle East to the world. So we are really positive around our future and very much anchored towards this Asia, Africa, Middle East footprint that really gives us an edge.
Awesome, really exciting, Shelley, and wonderful to hear. So so building on this discussion so far, this group, it's fair to say, has pretty incredible experience on the ground dealing with the risks and the opportunities. So for those organizations that are tuning in today that are potentially, those individuals potentially dealing with these issues and they're not as experienced or used to dealing with them, if there were one or two lessons learned or one or two best practices that you've each developed over the years that are your guiding lights or North Stars when operating across complex and emerging markets, what would those one or two best practices be? Sandy, will we start with you?
I mean, I think number one, in terms of where we struggled is unexpected growth. We're very much a reactive organization. We're the firefighters, sort of. We go out where countries need us, and resources can be constrained. We need a bit of bench strength. So I think somehow augmenting with that, so having a partner out there to give you that bench strength, but also having a consistent and repeatable process. So clear governance, clear standards, guidelines that translate across all of the markets, all of the regions that we work in, I think is key. I'd say another thing that we really have learned and tried and true is you really have to have good local project oversight. It's critical.
Philip, local project oversight. I know that's a concept that's pretty familiar to you, but same question to you. One or two best practices that you would share with this audience today that has kept you out of trouble?
I can probably think of three or maybe even four. Always have a plan B. Plan for the worst, hope for the best. But most importantly, I would say never kill the customer vision, because no matter what the requirement is, no matter what the client is coming for, always try to find a way to, figure out a way how to sort out the requirement, no matter what geography, no matter what location, no matter what the scope is. There's always a way to find a solution. And then probably finally act with urgency, because time kills deals, especially in the emerging markets when situation can change very quickly, as we've, I think, all seen recently what's happening in Sudan.
Yeah, awesome, Philip. Really, really good thoughts. Rainier?
I think, I completely agree with everything else that everybody else says, but I think in addition to that is you need to set yourself up in a way that you can continuously evaluate and monitor performance of the real estate projects and monitor the market trends, because it does throw a lot of curveballs at you. It's one of the dynamics you need to get used to, because today is not the same as what's going to be tomorrow. So you need to be able to adjust your strategies accordingly. And the long-term plan isn't as long-term as you think it is, right? Things change very quickly in the organization. The other thing is, when we look at talent and talent development, is to have those skilled and cultural diverse workforce that really understands that market. Now, this creates another problem, is where do you find these skilled workers, right, to help you execute in some of these countries? So, we've started at the bank to really look at these markets where we could potentially have talent, and some we augment with neighboring countries or neighboring regions where we know that there's a strong potential to pick up stronger talent to manage these regions. You cannot sit in your armchair in Washington and manage this. It just does not work.
Great observation, Rainier, on talent and people. It's been referenced before, and we might come back to that in a bit. But Shelley, your North Star best practices, what would you say?
Yeah, look, I think the team's covered it well, and I mentioned it before. Really leverage that supply chain and partnerships. Go in and do your homework, and really take advantage of that local knowledge and skill. But as the panel have suggested, make sure that you've got a level of assurance from the centre. You need the team to be close to the ground, close to the market, making decisions in the moment, but you do want to make sure that you can pass that sleep test and have the right assurance in place to give you that confidence. I think the other thing is, it's very hard to future-proof a portfolio, even in a developed market at the moment, I would argue. So just try and think, when you're doing your due diligence around that property, and Philip was talking about the advisory function that Colliers provide, really just reflect on how fluid and flexible you could be in those early years until you build up and adjust and experiment that business model to ultimately be able to put something in that might be self-sustaining. So you might do something in a more of an incubation or creation space to start with. Ultimately, as you build out that business proposition and get to that go, no-go point, but make sure you've got bags of resilience and personal and professional. But these are some of the most exciting markets that I've personally worked in, and I'm sure many of our audience have as well. So lots of upside.
Awesome comments, Shelley. So moving to another topic. So the International Monetary Fund, the World Bank, Standard Chartered Bank, you each do an incredibly important and play an incredibly important role in supporting the efficiency of the global financial system, in ensuring the health and resilience of global economies all around the world, and the efficient transfer of trade and capital flows throughout all of these countries. So with that as the context to this question, if we think of the issue of geopolitical risk, we're today living in a world with lots of geopolitical risk. But I guess the question I'd like to pose to you, and you have a much wider spread of what's happening, not just in the countries that get all the media attention, but in lots of the smaller countries around the world. So today, are we dealing with a similar level of geopolitical risk that we've dealt with and managed over the historical norm? Or in the last, let's say, 3 to 5 years, have we seen an increase in the level of geopolitical risk? Whoever wants to take it.
That's a tough question, Andrew. I think that I can only speak for my own experience, but I think we have been seeing quite an increase in some of these challenges popping up. The dynamics are, all around the political instability, and it seems to be that there's a lot more happening in some of these regions. Access to the internet has actually, sparked that, in the fact that people revolt if they don't like certain policies, right? So the fluctuations is a big thing around inconsistent regulatory and frameworks that governments put in place, and people get frustrated. And that just brings a whole new dynamic to the risks around real estate projects. I think the uncertainty is going to continue. The fluctuations in some of these countries, Argentina is a well-known example of that, where, whatever you plan today, we've just RFP'd a construction out there, and, despite having the best quantity surveyors on that project, the prices came in 5 to 6x the expectation, right? So you just show that, vendors in these markets are capitalizing on the fact that there's instability in the country, and you need to be aware of that. So, and this happens more and more and more. So I don't think we're going to see the end of it, but I do think that you're going to have to find a way that you can have flexibility and adaptability in those markets. And one of the key things that we find is a negative drag on that is what we call cycle time. Typically, organizations like ourselves don't make decisions quick. And time is an enemy, because prices change very quickly and dynamics change very quickly. So the idea is to set yourself up to be able to execute faster than that you normally would be, in order to avoid some of these risks.
Great observations, Rennie. Sandra, do you have a sense of, are we at a historical norm, or is it increasing?
I mean, I think I add on to what Rainier said, in the sense, I don't know that it's more. I think there's an awareness of what's going on around the world that we've never had before, because of the internet and the access to that internet in more and more countries and more markets. I think what we did experience in the last few years, obviously, is some challenges that have impacted globally. The case of the pandemic, and that was obviously unprecedented. But even the conflict in Europe, that impacted my project all the way down into Kazakhstan, because of the regional impacts to the supply chain, and it still does. So I wouldn't say quantifiably it's more. I think what it does is it points out the need for an organization to really have a strong risk and mature risk management system to help better identify and assess, and then adapt to those changing landscapes.
Great observation, and Sandra, and maybe Shelley and Philip, I might flip this over to you to build on Sandy's point there. So, given that geopolitical risk is going to be a constant, particularly across complex and emerging markets, as CRE professionals and CRE leaders who ultimately have responsibility and accountability for still executing in these markets, what should we be doing to best prepare to make sure that we have the resilience, we have the capability, and that when these risks do materialize, we're ready for them? Shelley?
Yeah, look, I mean, if the last 2 years has shown you anything, the constant stress test and analysis around your business continuity plans and your governance assurance is front of mind. So I think while it is difficult at the moment, in some cases, to future-proof that portfolio and take balanced decisions, given there is in some markets so much uncertainty, I would make sure that you've got independent quality stress tests around your model. As I said, I would use the expertise and external insight from a partner to also provide you that independent lens. You definitely need to build contingency into these plans, and that's everything from time, budget, supply chain. You know, these are things that probably previously we all dipped into contingency fairly early and ran it quite dry. When you've got some of the inflationary pressures that we're seeing at the moment and the currency movements, these types of things to future-proof that transaction, that project, and eventually that portfolio are going to be key. So I found that the team has really doubled down in terms of that risk environment and making sure that we're very connected on the front line, which I think goes back to exactly the point Sandra and Renee were making, that you can't manage some of these emerging and complex markets from the center, from the HQ. You do need to get out there on the front line and get a feel for what's happening and where then you can add the most value and resilience to support that project in what can be some uncertain periods of time.
Yeah, great perspective, Shelley and Philip. Any additional thoughts from your end?
Maybe I'll just close it with two points, Andrew. So one being from the execution perspective is to have a robust delivery platform, both in terms of, you know, whether it's kind of colliers executed or best-in-class brokers executed. And I know a lot of the local partners are on this call, so I do want to thank them, you know, for the mindset to, you know, always put the client first and kind of, you know, look for the client's best interest. And the second point, which I don't think anyone mentioned yet today, maybe I didn't hear it, was having a reliable market data, because, you know, these markets are, you know, also characterized with a lack of trusted market data, which the companies, you know, all need to make decisions. So I think where we can support and where we're trying to support is, you know, work with the local networks to always have the most up-to-date market relevant data, you know, so the decisions can be made relatively quickly.
Thanks, Philip. By the way, we're going to go to some questions from the participants in a couple of minutes. So for those that are tuned in, feel free to submit your questions on the Q&A button, and we will collate those here in London and address them in 4 or 5 minutes time. But another really important issue that wanted to get the panel's perspective on is diversity and inclusion. So certainly all 4 organizations on this call have exceptionally progressive views on diversity and inclusion, and we all appreciate its importance to the future of our organizations, the future of the commercial real estate industry, but overlaying all of our motives and aspirations and views on diversity and inclusion. Is this a more complex issue to deal with in complex and emerging markets, or should the fundamental decision-making and evaluation of how we try and drive a diversity and inclusion agenda be absolutely the same in a complex and emerging market or a mature market? Sandra, would you like to go first?
I mean, I don't see a fundamental difference per se. I just think that there's different risks that arise in the emerging markets that you have to be careful when you're balancing that view. You know, we sort of approach this from a procurement and sourcing activity basis, you know, where you're attempting to source local, and that's how we're seeing some of that come about. But sometimes it's just not, the risk is just too high to be able to do that. Either delivery is not there, supply is not appropriate, quality is not there, etc. But for the most part, I think we've been pretty fortunate.
Shelley, you've been a champion of D&I in your own organization and throughout your career. How do you view that this topic? Is it the same or different across these geographies?
Yeah, look, I think Sandra's open with the right perspective. I think the principles as an organization are there, and again, Standard Charter is really public around their inclusive environments when it comes to the 90,000 colleagues that come into our buildings and branches every day. We obviously build in inclusive design standards in all of our retail outlets as well, so that we can support any type of challenges that our clients may have. And then obviously we're investing in the communities. I think to Sandra's point though, when you look at some of those areas of focus within the D&I agenda, it differs in some of these emerging markets, and you need to be culturally sensitive to that. Where you approach supporting gender and ethnicity in one market versus another, you just need to be far more culturally aware. You need to then obviously reflect that in your inclusive design to make sure that you are empathetic to the local environments, and also then be able to make sure that that experience, back to one of your opening points there, can flex when it comes especially to building in security and safety when we're trying to ensure an inclusive environment for all. So I just think you need to be, as you would in any market, you need to be quite in tune with what that local requirement may be, whether it's culturally acceptable or it may be more heavily regulated in some areas, depending on the D&I agenda, that piece that you're looking at.
Philip, when you overlay those comments to some of the challenges certainly you've experienced in certain countries, that we know D&I is less of a priority for that country, just given the overall level of economic development within that country. What are some of the on-the-ground practical issues you've experienced and have to overcome in trying to solve for the diversity and inclusion objectives of some of our larger corporate clients?
Something that resonated with me that Shelley said was the cultural awareness. I think that's very important, and the overall kind of promotion of sustainable partnership is key in any market. So kind of what I'm dealing with, or what my team is usually dealing with on daily basis, is the, as I said at the beginning, is the silo mentality. So kind of how do we change the perspective, kind of going from broker to advisor, or from tactical to strategic, or from transactional goal to looking at business delivery or business results. So this is something that really takes time, takes effort, and takes, in my view, building ongoing relationships with the local broker. I guess I was really stunned. One of the last trips I did was to Chad in sub-Saharan Africa, which is one of the most corrupt countries in the world, and I really struggled, kind of finding local experts who were able to, give information for free. So it really takes that personal commitment to go there. If you're unable to get anything online, to really personally commit yourself to go to the market, deliver the information, yourself, see it for yourself, and then build a bigger picture, and then share it with the client. So I think that's what it's all about.
Thanks, Philip. We have a bunch of questions that have come in. Let me just pick one or two of them here. So one question on ESG that we haven't really, we've talked about D&I. So I'm just going to try and paraphrase this. So as each of your organizations thinks about, again, how you deliver and execute your ESG objectives for the portfolios within these markets, particularly your carbon net zero aspirations, how easy or difficult is it for you to align the delivery of those objectives across complex and emerging markets? Rainier, do you want to open with this one?
I'm smiling because this is one of the things that we've particularly experienced is when you have grand ambitions of driving a certain carbon number, or neutrality into the future, and you plug that into an emerging market, you very quickly realize that, you know, there's some deficiencies there, right? So you cannot, you know, fly in a solar panel from somewhere around the world, install it, and expect that to remain working for the next 3, 4, 5 years if you don't have the skill set to maintain that, right? So we're going to have to take this piecemeal, and that's what's being done, is that you evaluate what's available in the local market, what's the accepted norm to drive some of these initiatives. And there's nothing wrong with being ambitious, but it needs to be very carefully researched. And you need to actually do the risk analysis on that in terms of what's the longevity tied to that. You can build a net zero building in the middle of Africa. The question is, are you going to be able to maintain that for the next 5 years? Are you really going to get the numbers out of that building that you really need?
Great observations, Rainier. Shelley, Standard Chartered Bank, I know, is one of the most progressive organizations relative to your ESG targets. Is this a more complicated equation when you translate it to complex and emerging markets?
Yeah, I mean, your basic infrastructure that, you know, if you think of the E in ESG, is you're dealing with fundamentals on the ground that are very different. You know, your access to some of the different energy sources. If you're looking at water supply, looking at waste management, I mean, there's really challenges around making an impact on that environmental footprint in a positive way. When some of the actual external infrastructure is challenged. I think this is where being part of an organization like Standard Charter, we can take a franchise view, and in partnership with our business, then there may be areas that we can invest in broader communities, you know, as part of our commitment to sustainable finance, offering sustainable products through our retail network, to try and, I suppose, as an occupier, also be able to bring some of those environmental aspects and improvements to the broader community. But it's definitely, we've been very public in terms of every square foot we occupy in our corporate portfolio. We have an aspiration as we come out of 2025 that it has a net zero carbon footprint. And for us, we are seeing some real momentum in some of our more developed markets, and we are working on, I suppose, more creative solutions and with our partners to try and think about how we can bring, particularly in the continent, in the African markets, how we can bring some of our learnings from Asia to these markets to see if we can't be as progressive in this space. But there's definitely a desire there. You know, I think that if I think of the landlords and developers that we do work with in some of these markets, I think there is a continued focus around that. It's just the execution and the supply chain that could be less advanced in some of those complex emerging markets.
That's great, Shelley. And Sandra?
I echo what Rainier and Shelley have already indicated. You know, we did a pretty extensive study over the last year or so on microgrid, and again, it's the points of you can put it in, but do you have local providers to actually maintain it over the long haul? And so then it also becomes a balance of you have to eventually come back to the cost of installing such a system. And I have a much smaller portfolio in the sense of very broad, but very small in its size, the actual property. So there's a balance there, but certainly the IMF has a climate agenda that we certainly would love to walk the talk out in our field offices.
Awesome, thank you, Sandy. So one final question here that has come in, that it's probably a perfect one to end on, because this kind of sounds like more of a rapid fire question, but it's a fun one. So if each of you were to select a country that you have visited that is defined as a complex and emerging market, that you feel most excited about its future or was a really fun place to be, what would that country be and why? Philip, why don't we start with you? You spend most of your time in these countries. So
it has to be Rwanda without any doubt. I was really amazed with how the country has developed since the genocide. I also had a chance to visit the mountain gorillas when I was there. So honestly, unique experience once in a lifetime. Highly recommend it.
Thanks, Philip. Rainier?
Well, I'm just fresh back from Abidjan, and I got to say I was really impressed with Abidjan. Cote d'Ivoire, Ivory Coast. The bank hosted the International Corruption Hunters Alliance, which is an annual event that took place there, and it was a massive success. That country is so focused on driving out corruption that it's going to start emerging as a real stable economy going forward. Those challenges that we face today will probably still remain there tomorrow, but it's how we deal with that. So I've got a affinity for what I've seen in Abidjan. So it was Senegal, but unfortunately, as you've seen the news, Senegal changed dramatically in the last couple of months, and now it's Abidjan.
Thanks, Rainier. Sandy?
I was just going to echo that I agree with both Rainier and Philip's suggestions, but to take it to like where would I be excited to go back to, despite the challenges that it's facing, would probably be Lebanon and Beirut. It was just there's just an excitement and a general energy in the air in Beirut itself, and highly recommend when things get a little more stable there that folks travel. But Rwanda, we were just talking about it last week. In fact, Philip, about really how it's grown and changed over the last several years, and very exciting to see that occur.
And Shelley, you have the last word here.
Well, maybe not as exciting as others, but I'm really proud of our team on the front line in Pakistan. It's perhaps quite complex at the moment if I look at the definitions and the things that we are dealing with, especially if I think of the last 30 to 60 days on the front line, are things that have definitely put a challenge for our colleagues, our clients, and obviously the communities. We are seeing some green shoots there, and I'm really proud to see what the business has been able to turn around, and in particular our real estate business, and how we've been able to support our colleagues. So I'm due back there in September, and I look forward to seeing the team in Karachi in particular when I'm on the ground.
That's great. Awesome. Well, look, we're nearly up on the hour. Before we wrap up, just want to give a special call out, and it's going to come up on the screen momentarily, to the upcoming CoreNet Summit in September. This is the East Meets West Summit, which is taking place in Dubai. A very, very exciting event. This is the first time that CoreNet is going to Dubai for such a major summit. You can see the overview here in terms of the top 4 reasons to attend. I'll let you read them. I won't call them all out, but look, we're all very privileged to have such an incredible industry association like CoreNet Global that does so much to progress knowledge exchange and build a really strong industry and a really progressive industry. So if you're not registered for Dubai as of yet, please do. I think there's going to be a lot of people there. It's a lot cheaper, by the way, than you might think, because CoreNet have negotiated awesome rates in the Summit Hotel. But looking forward to seeing everyone this September in Dubai. So with that said, just to say a huge thank you to our panel this afternoon, Rainier, Sandra, Shelley, and Philip. Really, really appreciate you taking the time, share your knowledge, experience, and insight into this topic. And signing out from London, have a great end to the day and a great week ahead. Thank you for joining.
Thank you.
Thank you.
Thank
Thank you very
you.
much. Have a wonderful day.